below the 6, and so we have less inventory available than what would be considered, from a theoretical standpoint, a healthy market. And you can see it's an interesting trend line, because if you see the red line, which is the property price index, it's the opposite of what the inventory is doing, and that's what you would expect. As inventory goes down, you would expect prices to go up. So what I think these two graphs illustrate is that, yeah, we've had a relative low supply in the pipeline up on the big graph compared to the past, but now we're beginning to see it go up. And at the same time, we've had a fairly low inventory ratio, with the exception of during the financial crisis. It peaked up and we saw some prices go down. So with this as a backdrop, I'd like to turn to Mr. Ho and ask, what in this graph, can you talk a little bit about supply and your view on what's going on in the marketplace in terms of supply and inventory, and what accounts for this low inventory?
I think if you look into the recent past, and you'll see the low inventory is taken place immediately after the financial crisis, after 2008 or 2009. I think during that period, as we are all aware, the market have actually came down a lot, and that in effect affected the value. The value prices have also came down. As a result, developers are not jumping in to buy more sites or whatever. So definitely the supply side, from the supply side, there is a diminishing in numbers. But moving on towards the 2009 and 10, you'll see that the resale market, in the HDB resale market, the upgraded market, the prices have actually continued to increase over this period, drastically higher, in fact. So you see that there are a lot of money going to these HDB upgraders. And these are the sector of the market that is jumping into the private sector, because we are talking here about private sector supply. So the thing is that these people are jumping in to buy. So as a result, you see that the inventory is very low during this period. The 2010, 2009 and 2010, you can see that the inventory is low. And also at the same time during this period, as mentioned by Albert, you'll see a lot of this foreign demand, because of what's happening in Singapore over the recent past, where we have all this casino, the integrated resort, the development of Sentosa and Marina Bay Gardens, whatever. You'll see a lot of activities. And these have attracted a lot of foreign investor demands coming to Singapore to actually compete with our local demand. They have actually taken up quite a lot of this inventory. Okay? That's one of the reasons why I feel is the low inventory over this period. But as you can see, towards the end of the tail end of the blue line, you can see that it's creeping up. Okay? That probably will, in 2011, that's 2011.
Right.
Yeah? So that is creeping up, and I will see that this one will be trending up, because as you can see, over the next 2-3 years, definitely the supply is coming out with the government action. They are releasing more land, more sites for tenders or whatever. That will result in more inventory coming on. So you will see towards the prices probably trending downward a bit if you were to follow this red line and the blue line.
Okay.
Thank you.
Great. Any other comments on supply before we move to rental yield? Okay. So here's the average rental yield for non-landed properties, and this is very interesting data because it's using the rental data at the unit level that all the SRX member companies contribute to the database. So this information is not available anywhere else in real time, and this is a real-time rental yield. And as you can see, for non-landed properties, it's been fairly stable, of course, with the exception of the financial crisis, and when rental yield went up as prices went down. But it's fairly stable in the non-landed properties at about 4%. And I'm just going to move real quickly to show what's going on in the landed properties. And here on the landed properties, we see that there is a slight decline on rental yield for landed properties. Mr. Ho, you have any comments about rental yields or what can be causing this? slightly
I will comment on the non-landed.
Non-landed,
Yes,
okay.
this is more interesting in the sense there are more investors coming in to look at this. You see, in Singapore, traditionally, people buy property not for yields. Okay, they are looking more for capital appreciation. They are buying property to stay in. They are buying property to pass on to their children or whatever. So you're talking about longer term. So long as the rental yield at this moment can cover the low interest rate or cover the interest rate, that's fine with them.
Yeah.
So as a result, you see that most of the time the yield is quite constant in the sense, remaining at about 4%, 4%. In fact, the yield, I take this yield as a gross yield.
Yes, yes.
Okay, because in the yield itself, you have to take out all your outgoings, your property tax, your service charges, whatever. The net yield is even lower than this.
Right, right, absolutely. And the yield will be affected on an individual basis, how well people manage their unit, what type of rent they get, et cetera, et cetera. But this is just a macro look kind of in general, in terms of general trends. This is I won't ask for any comment on this, but this is just a graph that we got a query from some of the press on some more granular information in terms of what's going on with the rental yields. And here you can see that the core central, we broke the rental yields into the core central, rest of central, and outside of central. And you can see that on the core central level, there's been an increase in rental yield of 1.28%, whereas outside central at negative 2.34 in terms of rent up on the first table. Then the second table shows you what the change in sale. There's been a fairly dramatic decrease in sale PSF for core central, and not so much on the rest of central or outside central. So when you see that earlier graph begin to plateau and then decrease a little bit, you can see that it's being driven in large part by core central for the sales PSF. And then finally, in the rental yield has actually gone up on the core central side, 12.74%, and that's in large part due to the increase in rents that the core central has. And so now we'll show you a graph of the private rental market, which I think is another interesting graph that nobody's ever seen before until the SRX was created. This is all, again, based on real rent information at the unit level, contributed all by the member companies. And you can see the red line is the entire marketplace, and then you can see the rental prices for the core central, which are dramatically higher than the average median price. And so they've rebounded significantly and actually seem to have exceeded the rental price, or about on even with what they were before the financial crisis. So does anybody have any comments? Ismail?
Maybe we can go back to the earlier slides on the rental yield for non-landed and landed. Maybe I do see some landed, and the earlier one was non-landed. Okay, generally when I look at non-landed, we look at it as an average being the gross is at 4. The only time that we hit almost above 5 was during the crisis when the property prices really went down, because it's a fact. I mean, when the price is down, the rental remains stable, then you get a better rental yield. And therefore, the correction in 2009 in terms of the price and subsequent increment has helped an overall rental yield of 4%. Okay. That's as far as the non-landed. We go on to the next slide, to the landed. We look at landed. Why landed? The rental yield has been dipping, especially if you look at it in the last 3 years, or even if you compare it in the last 5 years. Because the landed property prices in the last 3 years has doubled, but the rental have not gone up that much. Anybody who have bought a property in 2008 beginning and now, which is almost 4 years from 2008, the properties of landed properties are almost double. So it is always the fact, when the price goes up too fast while the rental don't catch up, then the yield tend to go down. So what can we interpret, in my opinion here is this: how much more can a landed property go up? It has already gone up 100%. Do we expect to see in the next 4 years? We all tend to think that landed property is gold mine and landed property is sure to invest. I generally agree to that. Landed property is gold mine and long term. But I come to this opinion after looking at the rental yield return. The growth for landed property in the next couple of years, even though it seems relatively positive compared to the other condominiums, but it is going to be muted. Because a very sharp rise, if you just evaluate another 50% increment in the next 5 years is not likely, then your rental yield will not support such an investment. So this is one aspect of it, that if you look at it from the rental yield, the future of landed property prices will continue to grow, but will be likely to be more muted.
Okay.
Yep.
Great. Interesting. Okay. In the interest of time, I just want to go to HDB and ask Albert. Here we can see the median resale price, and we did it for the entire country, and that's the red line, and we just threw up one of the towns, Bishan, just as a point of comparison. And what I think is interesting about this particular graph is on the HDB side, you don't see the same reaction to the financial crisis. There's a nice steady growth, but it's actually a fairly strong steady growth. So, Albert, what are you seeing on this graph?
Well, actually, in my personal opinion, the reason for the steady increase is the supply and demand problem. Okay, first you have the increase in demand due to the increase in population growth, very rapid growth. Okay, the peak was sometime in 2009 at 90,000 for that particular year. The other problem is the supply. Okay, if the supply could catch up, then you would not have this problem. The problem is that there was a